Hey guys, welcome to daytradetowin.com. Today I'm going to show you an example of a day trading strategy that is super simple, and it's based on ideas from the previous episodes in the series, so it's 100% based on price action and volume. We're going to present more day trading strategies in this series, so make sure you subscribe to our YouTube channel. The first thing you need to do is to decide what you're going to trade. At daytradetowin.com we recommend our students to trade the E-mini S&P 500. It's very easy to get started trading the E-mini S&P 500, and we can provide you with a free day trading platform and free live real-time data. So go to daytradetowin.com to get it. Anyways, the first thing to do is to open up a live chart of the E-mini or whatever you want to trade. In this example, I'm going to show you Google. But you can trade Forex, cryptos, stocks, commodities, futures, anything that is traded. I personally would apply this to a 5-minute chart because that's what I'm most comfortable with. But if you're a shorter term trader, a scalper, or a longer term trader, feel free to use this strategy on whatever time frame you want to use. Then when you have your chart open, you will start looking for candles with huge volume. The volume needs to be really high, extremely high, which tells us that there's huge interest in that particular price level where the market is currently trading. There's huge supply and demand. People want to buy or sell at that specific price level. The next thing to do is to check for any news. If the huge volume is based on some news event, then you will need to determine what implications that could have. I wouldn't trade if there was an announcement made or some economic news that was scheduled to be released. Those sort of things can cause the market to react in quite erratic ways. And also one more thing, and this is important, we don't want to trade this strategy in the morning when the session opens. For that kind of trading we have the at the open 2 instead. The session open usually has extremely high volume and very high volatility. But if you want to trade the session open, I definitely recommend the at the open 2, and it's available at daytradetowin.com. The next thing to do is to wait for that high volume candle to close. It doesn't matter if the candle is red or green or doji. It doesn't matter if the candle is big or small. If the following candle also has the same amount of volume, then you should wait for that candle to close as well and include that. And then once you have 1 or 2 candles on huge volume, what you would do then is to find the highest high and the lowest low of that or those candles and draw a horizontal line from those points. And you will now have a range. In this range there was a lot of interest. A lot of traders bought, a lot of traders sold, so this is significant. It's a significant price level. We don't really care why it was important, why there was this huge volume, because we are technical traders. And now you just wait until you get a candle that closes outside this range. If the following candles trade inside the range, you will wait for a candle to break out of the range. And you want that candle to close outside the range, and that will be the direction that you want to trade in. But you don't want to enter a position just yet, because now everybody's jumping on the bandwagon and it could be a false breakout. Instead, what you would do is to wait for a pullback or a rally back to the range. So you would enter your trade with a limit order at this level. If the candle closed above, then you would enter a limit order to buy at the highest high of the high volume candles. If it closed below, then you would enter a limit order to sell short at the lowest low of the high volume candle. Then you just wait for the market to retrace back to these price levels, because the market always wants to test where it has previously been. So it's very likely that you will get a retracement back to this level. And sometimes the market does not retrace all the way back to these levels, but if there's a pullback to the optimal price, then you will get filled. But you'll need to be as quick as possible with your limit order, because they're filled on a first come, first served basis. So don't wait until the last minute with entering your limit order. Sometimes there will not be a pullback at all. You can also enter this trade once you have 2 consecutive candles closing above or below the range. Then you would just enter in the same direction as those candles. Then when you're filled, you need to manage your trade. I suggest that you take profit at 1 times the ATR. And the ATR is a good tool that you can use in order to base your profit target on what you can realistically expect from the market at any given time. And you can also use the high or the low of a previous swing or wave, depending on if you're long or short. That's a little bit more advanced profit-taking strategy. And you'll also need to protect yourself with a stop-loss order so that you're stopped out if the market goes against you. Now, the easiest stop-loss would be based on the ATR, but you can also use other stop-loss strategies. And we'll teach you great stop-loss strategies further on in this series. We'll continue this price action trading series, so please make sure you subscribe. And if you like day trading, please give us the thumbs up and like our videos. I hope you like this super simple day trading strategy. In our mentorship program, we will teach you more than 10 different day trading strategies that are even more powerful than this one. Our next 8-week day trading mentorship program begins soon, so make sure you sign up while there are still seats available. Until next time, take care, bye bye.